All right, class. First off, as always, good day. I'm glad you're here. So, as you can see, I'm not in my apartment. This is actually, I'm in a hotel out here near Stanford. Um, and I did get sick, if you can't tell from my voice, going from the really hot, valley to the cold air over here in Stanford. Um, I did get a little sick, so hopefully you could still hear me. Hopefully you can make out what I'm trying to say. Okay. So let's go ahead and get started with this lesson, which is about, as you can see, insurances. So the question I'm asking you is this from this warm up picture. Look at what's being said. Look at the guys, look at their charts. All right. And look what they have on and all that stuff. Um, what is the unfair thing you see in this picture? What is something you're like, yeah, that doesn't look right, you know. So again, look at their charts, look at what they're wearing and things like that. Um, Look what's being said, and tell me what is the part that you think is like the most unfair. Okay, so pause the video, write your response because we're moving on in three, two, one. All right, guys. So there are basically four major insurances that are, we use the word needed loosely, because the thing is, yeah, you don't need it, but it does help you a lot if you have it in your everyday life. Car insurance, life insurance, renter's insurance, house insurance. Okay, excuse me. Now, car insurance is one of the only insurances you are required to have. You have to have it if you're driving a car. No ands, if, or buts about it. You need car insurance. Okay. Now, every state is different in enforcing it. Some states are very strict on it. You have to have it, things like that. Some are like, well, you don't have to have like all this coverage. You can have just this small little amount, a minimum, you know. So depending on which state you live in, you need to see what they require. What's the bare minimum type of insurance you need? Now, most states, large majority of them, require that you at least get liability coverage. Now, what's that? That's basically property damage and or injury to another person caused by an accident in which you're at fault. So if you fall asleep behind the wheel and you driving to someone's front lawn and bust down their fountain, um, then that liability covers uh, that property damage, the fence and all that stuff, whatever you destroyed on that person's property. Okay. Um, Now, I had a student some years ago tell me, "Well, I would just back up, and go away." Here's the thing, guys. That's called a hit and run, and that's very, very illegal. And if the cops find out, they can, if they pinpoint it to you, yeah, you're facing even more charges, and the consequences are going to be more harsher. Okay, so it's not worth it. You're at fault, whatever. Stay there, you know, call, and that shows responsibility, and the charges won't be anywhere near, and especially if you have liability, then you're covered. So don't don't run. Now, you can get something called full coverage. That's another option. Basically, you're covering every basis. And again, what this means is it usually means, depending on your insurance, uh, all the main parts of your car are insured. So engine goes out, a radiator, whatever, is taken care of, including bodily injury, property damage, uninsured motorists, PIP, which is personal injury protection, comprehension and collision. Okay. Now, what does PIP mean? Okay. PIP, it covers medical expenses. caused by the car accident. So a whiplash, you know, um, if you hold the steering wheel and you get in an accident, you hurt your wrist, that's taken care of. Okay. And here's the thing with the PIP. It doesn't matter if it's your fault or not. If you have that, your medical bills could be covered. Maybe not 100%, but maybe 90%. So still something. Um, Collision, again, pays for the cost of repairs on your car if you get hit by another car. Okay. And again, you can use it if it's your fault or not. So again, you have to remember this, guys. That part was just uninsured motorists. There are people driving without insurance. And if they hit you and they have no insurance and you don't have this kind of stuff, collision or PIP, then you have to pay out of your pocket because these guys can easily dip out, not pay, basically explains in court, oh, I have no money, things like that. And your car is not being fixed, and it's going to be months and months and months, you know. So, yeah. So it's best to get that kind of stuff because, again, you don't know the person who hits you or the other people who are driving, if they are uninsured or not. Okay. Deductibles. Now, this is how much you pay out of pocket when you make your claim. Okay. So some people have a 500, some have a $1,500 deduction or deductible. So it's just up to you. And they do show you the different levels and how much you would have to pay and things like that, what you get for each one. Now, like I said, if you get in an accident without insurance, you're going to have to pay for everything out of pocket, not just your car. We're talking your medical expenses, your car, the fines you have to pay because you don't have insurance. If you cause property damage, you're going to have to pay everything out of pocket. No deductions, no, oh, part of it was taken care of with your insurance. No, none of it. Okay. You need to have car insurance. So, life insurance. Okay. It's basically a contract between the insurance policy holder, which is you, and an insurer or an assessor. Okay. Where the insurance insurer promises to pay somebody, whether it's your mom, dad, girlfriend, your wife, kids, whoever, some money when you die. Okay. So, what's required when you get life insurance? What do they look at? First off, they look at your medical history, what medical conditions you have. So, someone like me now, I have cancer. So, they're going to look at me like, ooh, that might come back. So, the how much I have to pay would go higher because I'm more of a chance to die because of cancer or cancer coming back and hurting me or killing me than other people. They look at surgery. Did you have open heart surgery? Did you, um, you know, do you have a defective heart and you had to have surgery or defective lungs or whatever? They look at that kind of stuff. Okay. Yes, they look at your age too, because when you're younger, they're like, oh, well, this person's probably going to live for a lot longer. They do look at your lifestyle, your driving record. You know, how do you drive? Do you have speeding tickets? You got in a wreck? Are you the type of person who, you know, takes risks, with your life and do daredevil stuff? Because that makes them adjust your how much you pay. Because again, the safer you are, the lower your payments will be. But the more at risk you are, the higher you're going to pay. So they do look at your family medical history. Is there a history of cancer, alcoholism, things like that? They look at your blood pressure. Is it high, low? They check your heart. Is your heart good or is there a defect? Is it at being a young age? Is it already messed up? They look at your height and weight. What's your physical ability? They look at take blood samples, urine samples, see if you're on drugs. see if again they're not gonna like rat on you. They just want to know, are you the type of person who's taking, you know, any of these illegal drugs? Because again, that kind of stuff shortens your life. So they don't want to pay for somebody who's basically on the verge of death, $1 million policy. Why? The person's going to die. They're taking care of themselves. Why should we give them this policy when they're going to die? No, no, no. So that's why. Okay. Now, when you get your own apartment, you want to get renter's insurance. Now, what does it cover? It covers theft, water damage, backup damage, certain natural disasters, and bodily injuries. Now, this is what I found that was interesting. 60% of renters don't have renter's insurance. Okay. Now, what does it mean if it protects you? Okay. Well, thing is, let's say you're in your apartment and you turn on your fan and it starts spinning, right? And let's say somebody you invited over walks in and then the fan falls down and hits them in the head, right? Unhinges and hits them in the head. This protects you, you know, if they get injured. Okay. Also, from some things I've read, there are some policies that protects your pets if they get hurt, damaged in any which way. Um, Now, when it comes to theft, this is what part one I thought was interesting. It doesn't include everything, and on top of that, there are certain things they'll ask you for proof of purchase. When did you buy that? Did you actually buy that? Because some people could put like, oh, I had a painting from Van Gogh. Yeah, you're telling me you had $1 million piece of art just hanging in your apartment. Yeah, if that's the case, let's see the proof that you bought that. You know, if you try to say, "Oh, I got this jewelry," okay, well, show us proof that you actually bought that. So receipts, invoices, delivery statements. So like if you said, "Oh, I got a package from uh, Amazon," and somebody stole it, from my apartment. Oh well, what's your proof? You can look at the statement. Amazon usually tells you it was delivered, bought on this day by this person, delivered to this address. You know, they show you that stuff. You know, so that's what they mean with the delivery statements. Okay. Now, renter's insurance is a little different than home insurance. Okay. Home insurance is when you actually own a home. And honestly, guys, it's one of those must things you have to really truly have. Uh, Now, what does a typical house insurance, premium thing cost or sorry, cover? Basically, destruction and damage to not only the inside of your home but the outside of your home. The loss of or theft of possessions. So again, if someone breaks in your house and steals stuff, um, part of it is covered. Personal liability, the harm of others. So if someone comes to your house and gets hurt, you'll be covered. Okay. And there's three levels of coverage. There's cash value. So let's say um, you lost, I don't know, something special, just using a deck of cards. They'll give you the cash for it. They'll be like, okay, here's 20 bucks for that. You know, some places might say, oh, you lost your phone. Okay, well, um, we'll replace it. They'll give you the money to replace it. You know, so you can't be like, oh, well, I'm going to get the newest Apple phone. Well, no, because they're giving you the money to replace that phone that you had, the exact one you had. Okay. And the next part is the extended replacement coverage. Sorry, cost value. So again, basically the same thing. It's just they're like extended warranties and things like that. Now, here's the thing: we talked about the theft. Um, it doesn't include everything. There's certain things that they just don't cover. Certain things like jewelry, artwork, those type of things. You have to have your own insurance to cover those. So let's say you did have a Van Gogh. That Van Gogh needs to be insured. That one piece needs to be insured. So just in case it does get stolen, if something does happen to it, you still get money to basically for the loss of it. Okay. Another one I thought was funny, but it doesn't cover identity theft. I know this is a big problem nowadays, but it doesn't cover identity theft. Okay. Also, earthquake and flood. You get home insurance, it doesn't cover that. Now, I know some of you guys are thinking right away, yeah, it does. There is, insurance for that. Yeah, because you have to buy those separately. You kind of have to add on to your home insurance with earthquake and flood. Okay, it doesn't come with your home insurance. You have to like add on to it with that. Now, here's the thing though. Here in California, earthquake insurance pretty high compared to other parts of the country. Kansas City, the right in the heart of the country, they don't have many earthquakes. So their coverage of earthquakes, the payments are really, really low. So most people don't even bother buying it. But flooding over there happens because they're Kansas City is right next to the Mississippi River. Mississippi River floods, you know, they it's gonna flood, you know. So that's why they have them as add-ons. All right, so here's your final question. Do you think insurance is a scam, or do you think it's something that's hey, it's truly needed, it's not a scam? This really does help out people. Okay, so what do you think? What's your opinion on it? Okay, so think about it, write your response, justify it. Um, okay, so once you finish this question, you're done with this lesson. So hopefully you learned something new. Hopefully you enjoyed it. All right. So with that being said, you guys, you take care, you be safe, and I'll see you guys later. Okay.